right.
Well, good evening, everybody. Thank you for joining us on this fairly beautiful, nice and sunny day here in Saskatoon. I think we got a storm coming, but I think it's 28 and nice and sunny here now.
Yeah. Yeah. Well, I was just at the kids' soccer and it was getting really windy. So, but anyways, yes. Thank you everybody for showing up with us. Welcome everybody so far. We're gonna get into this. We got a lot to cover today. There's a lot I'm gonna throw at you guys. My goal here by the end of the evening is get you guys or wrap up our end by about 8 o'clock, just after 8 o'clock, and then we'll kind of hang out for some Q&A, go over everything we talked about, things like that. So Ryan was on here with us. He is going to be on here with us as we go through this stuff. Ask as many questions as you can in the chat. That's the only way to communicate on our end, but one of us will be available to answer questions for you guys. If we can't get to it during this whole process here, we will answer it at the very end of the webinar for you guys. So the other note is this is being recorded, so if you guys miss something, need to recap something, whatever, this will be coming at you guys tomorrow in an email. If you don't see it by tomorrow, reach out to me. I will get it to you guys for sure. So again, thanks again for showing up, everybody. I'm pretty excited to do this. We have, like I said, a lot to cover today. So don't be shy. Throw stuff in the chat when you guys need to. The other thing I want to put in here before we really get into it, I'm going to be plugging this away. Ryan and myself will be plugging this away throughout the whole thing. So if any point of this you guys want to talk to us one-on-one, maybe about your certain situation, or want to see what you can potentially get pre-approved for, or anything you want to talk to us on a one-on-one basis, book a call with us is going to be the easiest way to do it. Just click on that link. It books a one-on-one call with us. It'll block off a time for you guys, so we make sure we have a really strong conversation with you guys. So again, thanks for coming out. So we're going to get into this really quick. We'll go through a couple housekeeping stuff and then get into the bulk of everything to help you guys when it comes to buying your first home in any market, really. So first and foremost, as I mentioned to you guys when you signed up for this, I will be giving you guys some free stuff here. Everybody loves free stuff. So you will be getting a copy of my complete guide to buying a home book. It will be in a electronic version, so you can read it on your phone, tablets, e-readers, whatever. You'll also be getting a condensed buyer's guide that kind of recaps a lot of this. Plus, you'll be getting the recording of this, and you'll be getting the booking link in case you haven't or aren't ready to book a call with us quite yet. So that will all come at you guys at an email, most likely by tomorrow. Again, if you don't see it by the weekend, reach out to us. I'm happy to get it to you directly. Sometimes it winds up in your spam folder, things like that. So just keep an eye out for that. And so what are we going to cover on this hour and a bit here that we're going to be with us? So I want to talk about the 6 most common mistakes when people buy your first home, okay? I can't sit here, Ryan and I can't sit here and talk about the entire buying process from start to finish because we have literally no time for any of that. We are just going to cover the basics and things that can help save you money in the long run, okay? And for this whole process, how to save you money, how to avoid issues, the most common ones when buying your first home. So not getting a pre-approval is number one. We are going to focus fairly hard on that one because without a pre-approval, the whole buying process kind of hits a standstill. But then it's not knowing about the New to Canada program, using your bank, all these things we're going to discuss in this webinar, but we're going to focus heavy on your financial part of it because that is the major step to buying your first home. So I see Ryan's talked. I see a few other people in the chat. I want to hear from you guys just because this is your first time buying a home or potentially the first time buying your home. Are you guys feeling any of this going into this, right? I know there's lots of stuff out there on social media, the media, friends and family. Lots of information can come at us. If you guys are feeling any of these things, throw it in here. Let me know because our goal is to help alleviate most of these. And if not, talk with us. Let us know how we can help you and what we can help make you feel a bit better about this whole process. Okay. Even no matter what you guys are hearing in the market, yes, it is a bit of a busier market, but every year it becomes a busy market, right? This is very doable. It just takes some luck and some skill and the right people to help you. And that's what we're going to go over with. So yes, I appreciate there is some uncertainty, but let us work with you. Let us show you what can happen and how we can get you guys to buy your first home here whenever you are ready. So we're going to get into this again. Like I mentioned, we'll do some introductions now, just so you know that who it is that's talking to you guys and how we are qualified to discuss this with you. So first off, I am Andy Goddard. I'm a realtor here. I'm with Realty One Group Dynamic. I've been a realtor for this month exactly 5 years now. I've built a team. So we are the team at ANC. That's Connie and Jessica. So Connie and I have partnered up to build a team just to help serve our clients a lot better, more ready to serve you guys, no matter what, whether it's one of us is busy or not, we're here to help you guys. We've helped many satisfied buyers and sellers throughout Saskatoon and the surrounding areas. So I myself live in Warman. I've been in Warman for 10 years, but I'm born and raised in Saskatchewan. But I focus around Saskatoon because that's a really busy main hub for me, but I go anywhere around Saskatoon. And I'm also licensed in all of Saskatchewan, so I can travel if I need to. But once it gets to a certain point, then we start, referring that stuff out. Like I said, I've been here for 10 years in Warman. It's where me and my wife got married. We've got 3 kids and a dog, and I just love the area. I love being here. I love building the family here, and that's why we like to help other people call this place home as well, whether it's Saskatoon, Warman, Martinsville, wherever, right? That just I love doing that. So also, when it comes to buying your first home, though, the majority of us do not have the funds to outright purchase a property with cash. If you do, that's fantastic. But if you don't, this is where you need help with the financing. So I myself am the realtor. I deal with the real estate side of things, the buying and selling of properties. But I also have teamed up with a fantastic mortgage broker. Ryan and I have been working together for years now. We're good buddies. Uh, we talk all the time. He's done amazing things when it comes to mortgages, and he's really great at helping first-time buyers out. So that's why we've teamed up together to help everybody. And I'm going to let Ryan kind of introduce himself and let him know who he is. So take it away, Ryan.
Wow, what an absolutely wonderful introduction. Thanks, buddy. So yeah, my name is Ryan. I am the finance guy, the mortgage broker that handles the pre-approvals and the mortgage financing and all the money side. Andy and I, as you mentioned, have been working together for many years now. He is the yin to my yang. We have been, really honing our skills to make sure that we are a one-stop shop for you, making sure that we handle all the pieces to the home buying transaction, from getting out and seeing those properties to the financial side. And you'll talk a little bit about, the expanse of our team. We've got home inspectors and lawyers on our team as well. I'm proud to be a part of something so great that can cover you as a home buyer from top to bottom. So I am with the mortgage group here in Saskatoon. I am Saskatoon born and raised. So I know the area very well. But as Andy mentioned, we are both licensed right across the province. So if you do happen to find that beautiful home just outside Saskatoon, maybe in that Warman or Muntsville area, or if you're even down in that Regina or anything south, we can help with all those transactions all the way across the province. So don't be afraid to reach out. If you do have something that may not be right around the Saskatoon area, we can help with a ton of that. I've been married for over 30 years to my wonderful wife, Michelle. I have 2 wonderful boys at home as well that hopefully will be moving out and getting their own properties here pretty quick after they finish university. But yeah, we really have a great family dynamic, and as Andy mentioned, we're friends. We talk all the time, and that's really what makes our team so special. Is that we are going to get those little intricate details covered for you, because we're talking all the time. We're going to make sure that all sides are going to know everything about your situation to make sure that we cover everything off great for you. Now, a couple of housekeeping items that I wanted to talk about. So you're going to notice that chat function is kind of kicked in and working. So please use that chat function for all the questions that you have. We're going to have you muted, obviously, so we can get through the webinar this evening, but we want to make sure that all the information, you can talk about it, ask us questions. Please know that every situation is unique. Every mortgage that we set up is unique to you. Everybody really thinks mortgages are a one-stop shop and every mortgage is the same as every other one. Not true at all. We've got different types of products that really fit you perfectly. If you're maybe newer to Canada, we've got a mortgage for that. If you're maybe having, you want something that you can pay down aggressively. We can help for that. We've got something that really tailors to you directly and what your needs are. So you're going to see Andy put that booking link here in. I'm just going to put it up there again as well. We want to talk to you one-on-one. So the information is going to be here on a broad level, but we want to talk to you on your individual situation, your individual circumstance, so we can really tailor make our service to whatever you're going to need. So click that booking link for one-on-one service. So that's kind of door number one. And of course, please use that chat function tonight. We want to make sure that we answer all of your specific questions. So what I typically find is if you've got a question, there are usually 4 or 5 other people on with the same question. So please be brave. We love questions. Ask away. We want to make sure that we get you as much information tonight as we can. So please use that chat function. I'll be kind of monitoring it when Andy's talking, and then vice versa. He'll be monitoring it when I'm talking. So we're going to keep that thing going. Don't wait till the end. Put those questions in right away so we can get those answered quickly for you. All right. Without further ado, I'm going to pass it back to Andy to get us started.
Awesome. Thanks, Ryan. So again, yeah, just a quick recap. Myself, the mortgage or not mortgage, the realtor that helps buy and sell the properties. Ryan is our mortgage broker. Amazing, does wonders when it comes to getting mortgages. So yeah, at any time, if you guys want to talk with us, book that call with us so we can have a one-on-one session with you. But we are going to get into the bulk of it now. And here we go. So I like to cover a little bit of the steps to give you guys an idea of what home ownership looks like. Okay, like the steps. I mean, I could cover this for hours just because there's so much that goes into this, but I'll just give you the very, very, very quick breakdown of everything that goes into it. So I tell everybody, whether they're renting, they're new to Canada, they're still living at home with mom and dad, they've just never purchased a property before, and they ask me, it's like, I'm ready to buy it, like, what do we do? So I try to educate them as much as possible. I try to get them on these so I can, show them what it takes, educate as much as possible. But the very first and most important step to buying your first home is getting a pre-approval. Okay, that pre-approval is going to do a number of things for you, but it definitely, the main thing is it dictates how we can search for a home for you. And I will get into that right away here. But get the pre-approval first and foremost for anything else. Once we have that, then we start the house shopping, right? We set up a search that's tailored to you and your family, specifically to what you're looking for, what you need. And then we kind of start looking at places. First, we look at the places online, look at the photos, and if you like it, then we actually tour it because it's very different from looking at photos to actually being in the property to get a feel of it. So we search properties, we find the right one, and then if you find the right one that you're happy with, then that's where we write up an offer. And we negotiate where we can. Right now, we are in a more competitive market, so negotiations are a lot more tougher to come by, but if there is room to negotiate, I 100% will because that is my job when buying with me, right? My job is when you're buying something is to make sure you find the right property and get you it for a really good price. Whereas if I'm working for the sellers and my job is to get the sellers the most money, so you need somebody who knows how to negotiate properly and how to work with other people about it, right? So once we write up an offer and the sellers accept your offer because they like everything about it, you're going to hear this a lot. You're going to hear the properties are conditionally sold. So a conditionally sold property is when the seller has accepted a buyer's offer. So the home is now still being able to market itself online. However, nobody else can go in and kick the buyer out that's currently has the offer accepted. Okay, so while we have a conditional offer, what we're doing is we're making sure all the conditions are satisfied for you, the buyer. So make sure financing is finalized and okay. We make sure we do any home inspections, any condo inspections, anything we need to do to make sure you're satisfied with the property before we remove the conditions. Okay. So when we remove the conditions, that's when it firms up the sale and it's now essentially your property. We just wait till possession day. So possession day could be anywhere from a few weeks to a month. Some cases it's been a few months, depends on if there's tenants there or whatever. But while you're waiting for possession day, this is when you finalize the financing. So you sign all the documents. You find a lawyer and hire a lawyer to transfer all the documents into your name. And then you also set up utilities, home insurance, all that kind of stuff. And then on possession day, we get the notice that keys are now releasable to you, the buyer, and you are now the new owner of the property and you just now own your first home. We do a thorough walkthrough of the property, make sure everything is good and as it was when we first looked at it. and then off you go. You are now a homeowner. So again, very basic steps to all of it. There's so much that goes into it, but Ryan's job and my job and the people that we help send to you to help you guys out, our jobs are all to make this as easy and stress-free as possible. We handle literally the bulk of it. We just let you know what we need from you. You guys get it to us, and then we keep things moving behind the scenes. You guys just do the rest, and we walk you through that as well. So, again, that's the basics of buying your first home. Um, but anytime you guys want to talk more about that, book that call with us. But we're going to get into the main stuff here. So, mistake number one is not getting a pre-approval. And why is not getting a pre-approval such an important mistake that you don't want to make? Getting a pre-approval does a lot of things. Number one, it tells you that you are able to actually purchase a property, which is the main thing, because we will be kicking owners out of their homes to look at it. We don't want to kick people out of their homes for somebody that can't actually, or we don't even know if they can purchase a property. So we want to be respectful to them that, hey, I have gone and got a pre-approval. I can officially purchase one of these properties. So that's number one. Number two, it tells us your range of affordability. We want to know how high your pre-approval goes, so we shop at that range and below that, so we make sure we don't go over budget and risk not getting the property. So we want to shop within your range, tailor that search to your range of affordability. Okay, that's the second reason why. And number three, when we write an offer, especially in a competitive market, the first thing a seller's agent does when we write an offer is they'll ask me, hey Andy, are your buyers pre-approved? If I say yes, that's much more easier for them to accept the offer. If I say no, they haven't quite got their pre-approval yet, they'll 99% of the time walk away and go to the next buyer because they know that maybe the next one has cash or a pre-approval with. So that's why it's very important. It's just more ammo for a successful offer to be accepted. Okay. So that's why this is number one, the most important step. Without a pre-approval, we can't be buying homes. So this is step number one. Okay. So what goes into a pre-approval? How does it work? And again, Ryan has touched on this, and I want to make it very clear too that this is just a general guideline of a pre-approval. Okay, every single person that's on this call, every single person out there, your neighbors, whatever, is all drastically going to be different than one another. So just because of what I say here doesn't necessarily mean that's all it is. Everybody has different situations, different finances, right? So just because you think maybe one of these things or two of these things might not work, don't stress. Let us know, see how we can help you. And it's either going to be a yes, actually, we can help you, which Ryan has surprised me numerous times. Or if you can't quite get there now, I know that Ryan's going to set you up on the right path to get there as quick as possible with a plan in place. Okay, so just I want you guys to come into this with a very open mind. It's not just a one size fits all. Okay. So, what goes into a pre-approval? First and foremost is credit. Right here in Canada, they love credit scores, right? They want to know how well you are at paying back money that you've borrowed, right? So, credit score, they want to see anywhere from about 320 to 350 as a starting point, and then anything up from there is much better. They want to see how you do with credit cards. Do you have a bunch of credit cards? Are they maxed out? Are they paid off in time? Do you have lines of credit? Same thing. Are they paid off in time? Do you make payments on them and you're not late? Have you been through bankruptcy? Have you been through debt consolidation? They just want to see that if we're going to lend you, or the lenders are going to lend you a ton of money, that you're able to pay it back properly. So credit is going to be one of the things they check for sure. Next is going to be income. So of course we need to know how much you make because the lenders need to know how much you can be borrowed for, right? They're not going to use 100% of your income because then you're straight up going to be house poor, and we don't want that. They're going to use a percentage of your income, okay? But they need to know how much do you make. So a few ways to do that is number one is if you're a salary position, we can get a letter from your employer that states you are guaranteed this many hours and this is your pay per month or per year. That works. The most common one is getting 2 years worth of your tax return statements because that'll give them a 2 year baseline of how much you make. Again, for anybody new to Canada, there is a new to Canada program to help streamline that. Okay, but just so you guys are aware, the things they want to know the most when it comes to income is they want to see if you have guaranteed hours and guaranteed pay. Okay, those are the biggest thing they look for. Now, if you have if you're working at jobs like Skip the Dishes, Uber, DoorDash, commission-based jobs like selling cars, right? Because there's no guaranteed hours or pay, they can't use that income right away. You do need to show 2 full years worth of income on that so they can get that baseline, right? But if you have guaranteed hours or pay, even if it's out an hourly salary, like you make, say, $30 an hour, they want to see that you're guaranteed 40 hours a week, 32 hours a week, all that kind of stuff is what they need to see for the income. Okay. So they're going to look at that. They're going to look at your credit. And the final and most and another very important one is the down payment. So when purchasing a property in Canada, really, the minimum down payment needed for a home is 5%. Okay, so you have to have 5% of the purchase price saved up. So 400,000, you're going to need 20,000 saved up. 400, 500,000, you need 25,000, and so on, right? So that is, you have to show that in order to get the pre-approval as well. So if you have really good credit and very good income, but your down payment is, let's say you only have $20,000 saved up, your pre-approval will be capped at what your down payment will allow you. So if you can be pre-approved for, let's say, 500 or 600,000, but your down payment is 20,000, you will be capped at around, 400,000 because you don't have the down payment to support the rest of it. Okay. All these three things do have to work together to make it happen. All right. So down payment, there's a few ways that you can get a down payment. Number one is your most common one, which is your own savings. So whether you've saved up for a while for this, you have it in TFSA, you have it in the first time home savings account, right? Wherever it is, your own savings is very, very good source of it. If you're new to Canada and you're bringing money in from across seas or wherever you're from, Ryan's going to touch on this. As long as you have it over here in a savings account untouched for 90 days, you can use it. But if you just instantly bring it over, there is a 90-day waiting period. So just keep that in mind. Again, Ryan's going to touch on that part. The second way to get a down payment is if you have RRSPs saved up, you can withdraw up to 65,000 per person to use that as a down payment. So you're essentially borrowing from your RSPs to use it for a down payment. So if you are thinking of going that route, reach out to your provider. They will let you know what the stipulations are, that you will have to start paying back into those after about a year or so. And there is a minimum amount you do have to pay back per year. So make sure you talk with them so that you understand what you have to do. Because like I said, you're kind of borrowing money from yourself for a down payment. So you're just paying yourself back. Okay. The third way can be what we call the bank of mom and dad. So you can get the gift of a down payment from an immediate family member. So mom, dad, brother, sister, grandma, grandpa. Anything outside of that, it gets too far out. But one of those can gift you the down payment to help you out with that. They just write you a gift letter and off we go. Okay. There is a fourth way to get a down payment help, but it is very inclusive. So if anybody on the call here is part of the Métis Society of Saskatchewan, the Métis does have a first-time home buyers grant. They'll give you up to $15,000 as well as some closing costs covered. So if you're part of the Métis Society, want to know more about that, reach out to us. I'll get you all the documentation of who to talk to, and it just works together with your own down payment, the rest of it, and go from there. So those are the 3 to 4 ways. But like I said, everyone, this is a general outline, okay? What I said is the main things they look for, but if you have something different or specific, let us know. Book a call with us. Let us know how we can help you some more and how we can work with you, or I'll at least get you there as quick as possible. But the nice thing about pre-approvals is they go to the underwriters, they review your income, your credit, and your down payment source, which makes them super reliable, and it tells us that maximum qualifying amount, so we shop within that budget. Okay. All right. um, Next, last little bit about the pre-approval. So if you go in to get a pre-approval and you're having maybe a bit of an issues, again, this is something that Ryan can help bring up too during the process, is a cosigner. So if you have a little bit of issue getting a pre-approval, maybe we can use a cosigner, right? So again, an immediate family member can cosign for you. Mom, dad, brother, sister, grandma, grandpa. Okay, as long as they are, hang on, I got a few people here saying, Ryan, can you hear me okay?
Yeah, yeah, absolutely, Andy. I can hear you
Okay.
good.
So just a couple people can. So I just want to make sure you, at least somebody can. So um Okay, yeah, I'm not sure why there's no audio for some people, but if we can keep, I gotta keep this rolling, but we'll see here. Anyways, yeah, so as long as it's an immediate family member and they are a Canadian citizen, permanent resident, they can be a co-signer for you. They're committed to being one for you for as long as you can't get your own pre-approval or essentially get approved on your own. But once you can get approved on your own, then you can get them off the title. Um, so there are no extra costs when buying a property with a cosigner. It's just if you want to take them off the title, then you have to pay a lawyer to remove them from the title. And a lot of people end up just saying, you know what, we're not going to do that because it could be about $800 to do. So they just choose to wait till they sell the property, then everybody's name gets off the title. And then when you go buy your next person or next person, sorry, your next property, then it'll just be you on the title. So there are risks for the co-signers. They're putting their name out there that make sure that you make the payments. But if you miss payments, then if you miss any payments or whatever, they can come after your co-signer. So they just want to make sure that everybody understands the risk and what goes into it. But it is an option if you need it. Okay. And again, that's just something that Ryan can work with you on. So, anyways. I think that kind of covers it. So I'm gonna run now. We're gonna run into something for Ryan to talk about. He's gonna go over the New to Canada program. So just another disclaimer for the New to Canada. This doesn't give you different interest rates or better interest rates or anything like that. All it's going to do is help get you pre-approved and get a bit more back history. Like if you don't have the 2 years worth, and Ryan's going to discuss that all with you. So I'm going to pass it off to Ryan and go from there.
Perfect. Thanks, Andy. Yeah. So what we actually find is that one of the largest segments of the first-time homebuyer market here in Canada, and biggest drivers of housing growth in Canada, is our immigration policies here that have brought new friends into the country in the last 5 or 6 years. Just to give you a little bit of perspective on the numbers, we immigrate over 1 million people into Canada typically every year, and that number continues to grow. Canada is a great place to live, and what we initially found was that most people came into the larger markets. They came into the Vancouvers and Torontos, Montreals, and that was really kind of the start of it. But what they found was that those markets, they were saturated with people. Getting housing was very, very expensive, and finding work was really tough. So we did see a larger in migration coming into the prairies, into the prairie provinces, Manitoba, and specifically into Saskatchewan. So we have seen a huge influx of people coming into Saskatchewan and specifically into Saskatoon. Just to let you know, the reason for that is employment is very gainable here. We have a lot of employment availability, and housing is also some of the most affordable across Canada. So we are in one of the most affordable growing markets here in Saskatoon. So finding a property here versus maybe a larger center is a lot more attainable. So we do see a ton of that. Now, what we did find was that our government, in particular, and our mortgage lenders do realize this as well, that we are bringing in a bunch of new people into Canada every year, but they probably aren't going to have those three pillars, or a lot of them, as Andy had talked about before. So if you remember those three big things, income, down payment, and credit. Now, the income one we can't do a lot about. We do have to make sure that you do have the ability to generate income and make the mortgage payment. So the income portion is pretty much the same. We will talk about that a little bit, but the credit and the down payment are two things that we do find that we can work with a little bit and come up with some different solutions for our new to Canada friends. So what defines a new to Canada borrower? So really, this is somebody that has immigrated into Canada within the last 60 months. Okay. So this is really somebody that's come within the last 5 years. Now, we do have to have people in that are either on a permanent residency status, so PR, or on a valid work permit, which has at least 183 days left on it as of the day of possession of the home. Okay. So work permit or permanent residency. I get asked a lot. I'm here on a a work permit, does that qualify me to get a mortgage in Canada? Absolutely, it does underneath this new to Canada program, specifically designed for you. Okay. Now, the one that we do get asked quite a bit about is people that are coming on a student visa. Unfortunately, we don't have that as part of our qualification underneath the New to Canada program. What we do find, honestly, is that most people that are here on student visas are only come over to study. They actually go back to their countries of origin 80 to 90% of the time. So unfortunately, the government decided to omit the student visa portion. Really what they want to do is make sure that people are coming in, but that they want them to stay. So we want a permanent, really a permanent home in Canada, starting out maybe through the immigration process. Let's talk a little bit about the income side here now. So, really, the typical New Canada borrower, again, is fairly new to the country, but they will usually get employed fairly quickly as they do have to find ways to live and generate, rent, food, all that sort of stuff for their family. So, the income side, pretty standard for what a normal Canadian borrower would get. We've got on there minimum 3 months full-time employment. Now, usually that is just because most jobs start with a 3 month probationary period. Now, if everything else is really, really strong and you're right at the end of that probationary period, that 3 month rule a little bit gray. We can usually get that approved for you, but we do want to show some stability and some structure. When banks look for income, that's really what they're looking for, is that they're confident that with your income stream and your employment, that there's stability and structure and long-term generation of that income to be able to pay the mortgage over the 25-year span. Okay. Now, the other thing that I do want to talk about is that we do have to be paying income tax in Canada. So if you're working for an employer, they will take employment off. They will take income tax off right off your paycheck. Absolutely no worries there. But if you are possibly on, you're working for an Uber or Skip the Dishes, those kind of are qualified as self-employed. If you do open up and start your own business, things like that, or if you are generating income from another country, sometimes that doesn't work. We do need you to be claiming your income tax and paying income tax in Canada. One of the things that we do get asked quite a lot is, hey, Ryan, I've come over with the kids. I'm working, in Saskatoon, but my husband is still working in our country of origin. Can I use this income to qualify? And unfortunately, we cannot. Based on that rule right there, you're not generating income in Canada and paying income tax in Canada. So unfortunately, we can't use that foreign income to qualify unless you have claimed it in Canada on your Canadian income taxes for a minimum of 2 years. Okay, now Andy kind of touched on this a little bit here. I just kind of wanted to touch on it a little bit further. Really watch things like expiring temporary job contracts, self-employment, things like that. If you're on a fully commissioned sales role, if you're self-employed, if you're skip the dishes or driving Uber, things like that. The reason for it is those types of incomes, they do fluctuate. They're up and down. They're not consistent like a structured guaranteed salary or a structured amount of hours per week. Those are really easy. We can do those right away. The self-employed stuff or the fluctuating income, we do need to see a minimum of a 2 year history on your tax returns, because the income, some days you'll do really well. Some months you might not do anything at all. The government really needs, again, to make sure that there is some consistency and stability with that income. So if all your income is inconsistent hours or non-guaranteed hours, or you're on a temporary contract for 6 months, things like that, typically we do need a 2 year history of those incomes to move forward. Okay. Now, one thing I do want to talk about here next is the credit. So we're on to kind of pillar number two here, the credit piece. Now, the credit piece and the down payment piece really work hand in hand with the New to Canada program. Of course, most of our New to Canada friends coming into Canada will not have any or very, very little credit established in Canada. Now, the government is fully aware of that. So they needed to find a way to still make sure there was good credit worthiness, but find ways around, just having 2 or 3 years on a credit bureau like most Canadians would have. Because, if you've only been here a year, you're not going to have that long of a Canadian credit history. So, what they've kind of done here is to show that you're still a good credit risk. If you've been in Canada for under 12 months, what is required is it kind of works hand in hand with the down payment piece again. So, what is required is that you have to have a little bit higher down payment at 10%. And how we would show your credit is we would have a look at your primary bank account. So if you bank with Bank X and your pay goes into that account every 2 weeks, we're going to have a look at your last 6 months of bank statements. And as long as the pay goes in, all your bills are well handled, and there's no missed payments on there, you're good to go. So 6 months worth of bank statements and that are well handled and 10% down, boom. As long as you're here between 6 and 12 months, because we do need that 6 months bank statements. So anything between that 6 and 12 months, that's what we're going to ask you for, and that will get your down payment and your credit satisfied. So between 6 and 12 months in Canada, 10% down, 6 months of your bank statements showing your account well handled. Now, if you've been in Canada for longer than 12 months, good for you. We can get that down payment. So, down payment minimums in Canada, even for Canadian citizens, is 5%. So, as soon as you've been here over 12 months in Canada, we are going to allow you to have a down payment minimum of 5%, same as everybody else. And what we're going to look for credit is we are going to go through and have a look at your rental history. So if you're coming over, you're going to be renting a place. We're going to get 12 months worth of bank statements showing your rental payment has been made on time, and a letter from your landlord that states the same. And we're going to get 12 months of any other structured bill. So whether that is a Sask power bill or a Sask energy bill, a Shaw cable, TV bill, SaskTel for a cell phone, an SGI if you pay for your car plates monthly, anything that shows a structured payment made well for 12 months, that will handle the credit side. So if you've been here over your 12-month mark, boom, you get 5% down payment. We'll get 12 months of your rental and 12 months of one other bill to show that your credit is solid. Okay, so that's really kind of what the down payment and the credit side works with. Now we'll flip back over to the third pillar, which of course is the other side of this conversation, the down payment pillar. Now, again, underneath this program, of course, because we do have a little bit more limited time in Canada, 6 to 12 months, they do ask for that little larger down payment at 10%. But as soon as you're here that 12 months or longer, and I've seen even some that kind of they make an exception even at 11. So if you're really, really close, we'll have that conversation and see how close we can get and maybe get you that 5% there as well. But 6 to 12 months, we need 10% down. And if you've been here for over 12 months, then you can go with a minimum 5% down, same as is standard in Canada. Okay. Now, as Andy mentioned, there's a few ways that you can get that down payment. The easiest one would be your savings, money in your bank account. Now, if you are bringing money over from your country of origin, please know that some banks do require that that money sit in your account at least for 90 days. So know that coming in. What we tell all of our new to Canada borrowers is get that money transferred over from your country of origin into your Canadian bank account as soon as you can. It just makes it so much easier on our side. If that money is there, it's sitting there for the 90 days, it's really, really simple on our side. We show the bank statement showing the funds in there, and away we go. The other side of that is people that kind of drag their feet on bringing the money over. And a lot of it is because maybe the country of origin only allows you to move so much money per year, so much money per transaction, or it's very expensive to move that money out. So have a look at your country of origin, where you're pulling that money from, what the rules are behind that. Nigeria can be a tougher one. It's very expensive to move money out. So sometimes you want to maybe pull it out before you come over in cash and move it over, things like that. So have a look at what your country of origin states for rules for you moving money out. But big thing, please move that money immediately as soon as you get into Canada, as soon as you can, because it makes it so much easier for the bank to say, yes, the money is there, it's in Canada, we see it there for 90 days, and good to go. Now, the other side of that would be, and I'm dealing with this actually right now. So we want to make this as easy and simple and possible for the lender that we choose to say, yes, the money is in there for the 90 days. Really, really simple to look through. You can see maybe a few small transactions that are going in from your pay transferred over, but the money has been in there for the 90 days. Please, please, please do not have many multiple accounts and move money all over the place every few days. It makes it really hard for us to follow and explain to the lender if there's $2,000 and $3,000 moving between 5 different accounts every 3 days. It makes it really hard to follow, and sometimes the lender will just say, "This doesn't make any sense. It's very confusing," and they will pass on it. So keep it simple, 1 or 2 accounts maximum, and make it really simple. Don't be moving money all over the place. Leave it sit there, bring it in, have it in there. If you want to add to it from your primary account every month, put your savings in there, please do that. But don't move money all over the place consistently. It just makes it really, really hard to follow on our side as well. So a couple other options on the down payment. Of course, we talked about savings. As Andy mentioned, a gift from an immediate family member is also allowed. So what we mean by an immediate family member would be a mom or dad, a brother or sister, or a kid, child, or a grandparent. So if you have an immediate family member that wants to help you out and provide a non-repayable gift for you for the down payment, that is also allowed underneath the New to Canada program. So we can do that for you. Even if it's money transferred from overseas, we will have your immediate family member sign a gift letter. We will see the money moved from their account into your Canadian account, and make sure you show the wire transfer as well. So if you do have that situation, please, please let us know and we can walk you through exactly how to set that up as well. Now, the big thing again is please, please, please be careful on moving money overseas. If you do have that situation, please click that booking link for us. Let's find out exactly what that situation looks like so that we can help you set that up quickly to get you ready to go as quick as we can. Okay. Now, again, I can't stress this enough. On the financial side, every situation is so unique. As you can kind of see on the different pillars and the different programs that we have, there's a lot of moving parts that we can work with in the background, but really knowing your individual situation allows us to give the best advice to help set things up, help the down payment, making sure that we've tracked if you're here for 12 months, we have a look at your rental history. We can get you, that cell phone bill for 12 months and really allows us to work our magic for you the best way that we can. So click that booking link. Let's talk to you. Let's kind of find out every situation around, and we can help you the best way that we can here. All right, I'm going to flip it back to Andy to keep this webinar going and finish this up. But if you have any questions on the New to Canada program, keep those rolling in the chat for us.
Awesome. Thanks, Ryan. So lots of great info on, again, this is all a recap for all getting a pre-approval and a New to Canada program. So there's one little quick thing I want to run over before we get to that on the real estate stuff and then get you guys out of here by 8. And that's the third mistake is not using your bank. Now, again, we are here to help save you money in this process any way that we can. We're also here to give you the best customer service that you possibly can when it comes to buying your first home as well. I don't have a problem with banks, okay? Everybody has a bank they use for whatever, checking, savings, investments, whatever. But what I don't recommend is using a bank for your mortgage. And I'll give you a bunch of reasons why. But again, I just want to really reiterate, I'm not hating on banks. If you do have a pre-approval with a bank or have talked to them, that's fine. But what I do recommend is you 100% get it reviewed or, bring it to Ryan and say, hey, they gave me this. Is there a way you can beat it or match it? And I've known Ryan for a lot of years now that if he can't beat it, he's going to tell you that. He won't try to put you into something that's, worse for you, right? So it doesn't hurt to get that. I know I've seen somebody up there, and I know Ryan talked about that, mentioned that is it good to get multiple people checking for your pre-approval? And this is the only case where I'd say it's okay is if you already have one or checked it with your bank, check it with an actual mortgage broker, check it with Ryan and see how they can beat it or make it better for you. Okay. So yeah, why would a mortgage broker be better than a bank? So Ryan has probably has mentioned it. I've seen him mention a few times. Is he has access to over 30 different lenders' products. So where he can shop your mortgage around to different lenders to find you the best rate, the best programs that's going to fit you the best, right? A bank is restricted to their one and only product. Okay, that's what you get. That's all you get, right? So let somebody shop it around to get you something better. Ryan works the same hours as I do. Real estate is like I wouldn't say 24/7, but it's evenings, it's weekends, it's during the day. And especially in a very hot market or a very competitive market, you need somebody who's ready to answer questions for you, especially for writing competitive offers. Ryan can probably attest to this. There's been numerous times that I'm writing an offer for somebody and I have a question about the financing to see how much I can push this to make it a very, very competitive offer. I'll text Ryan and he'll get back to me right away or at least as soon as he can. But I've known people that use the bank and they say, we like our bank, we'll go with them. But now it's after hours. I need a question, but nobody can get a hold of them because it's after bank hours and they're closed. And you're lucky to get an answer until the next day and it's very frustrating. Okay. Like I said, Ryan's going to offer you his best mortgage rate up front, where the banks can offer their posted rates. And some people either don't know this or don't like doing this, where they need to negotiate a better rate. But why worry about it when you have somebody that's going to do it for you? Okay. And like I mentioned, you can call or text anytime. Banks are harder to get a hold of, and banks are slower, notoriously slower. We are on a time frame when you write an offer and get it accepted. There's only a certain amount of time we have to get everything done. And majority of the time, the banks will take all the way to the very end and painfully drag it out. Okay, let's just get this done. Let's get somebody who knows what they're doing. Somebody who's gonna, and they work like I said, Ryan works for you and only you. Ryan is not employed by the banks, right? He works for you and your best interest. Where the banks, the person working there still are employed by the bank. They're going to work for you too, but they're kind of a bit of a conflict. So get somebody who's going to work for you, get you the best rate, save you money that way, right? Lower interest rate means savings. I'd rather you put more money in your pocket than the bank's pocket, right? A whole bunch of things like that. The other thing too is mortgages are 25 to 30 years, right? So you're gonna be making payments potentially for that long. If for whatever reason, and majority of us do this, I've done it. I'm pretty positive Ryan has done it. Many people do this where they don't live in their first home all the way till they pay off the mortgage. Okay, most of us will get into it, get started, build some equity. Then they need to either upgrade or they move or whatever. So we don't want to penalize you for doing that because it's technically called breaking your mortgage when you break your mortgage before paying it out. There can be penalties to do so, depends on how far into your term you are. Now, banks can be a bit more expensive. So again, we want to save you money for whatever your change of life is, whether you're upgrading because you're growing family, you got higher pay, you want something better, you want to turn your current one into a rental and start investing that way. Whatever the case may be, we want to make sure that you put more money in your pocket, not just to interest or penalties or whatever. Okay, so lots of things to think about. Not always just the rate is the number one thing. The rate does help, but programs and things that work that way and penalties and things like that are all things to consider. Okay. So that's why it's so important to get a mortgage broker to get Ryan to work with you on this because he'll save you so much more money. Okay. All right. Whew, we can. We're going to shift over a little bit. If you guys have any questions on the financing thing, I see Ryan's taking care of it. I'm going to run through the last little bit here. If you guys want to know more about your finances, see if you can move forward with a pre-approval or just talk about what you got going on, book a call with us. I'm going to shift over to just a bit of the real estate side of things. Again, how to save you money, things to avoid, all that good stuff. So, mistake number 4, but number 1 for the real estate side of thing is buying directly from a builder. Okay. Uh, builders are New builds are getting more popular just because of the limited inventory that we have out there. So I just want you guys to be aware that going directly to a builder is not going to save you money. Okay. People think that if I go directly to the source, I'm going to save it, but in reality, that's not true, right? They've already set the purchase price with the realtor stuff in their equations, right? So it's not going to save you by going to them. And chances are you're actually going to hinder yourself a bit on things you can throw into the new build. Okay. So with new builds, you basically get the bare bones. Again, each builders are different, and I can show you the different builders and what some offer and what don't offer, and what are ones to avoid and ones to go for, right? That's the thing you're going to lose too, is somebody that can shop you around. If you go directly to them, you're just going to buy their product and that's it. Where I can shop you around to different builders to show you different products, okay? And see what's a better fit for you guys. But you get the bare bones when you buy a new build. Basically, you get the main floor, the upstairs if it has one. The basement is going to be completely undeveloped. Um, there'll be probably no landscaping in the back. You might get some in the front, maybe. Most likely no appliances, no air conditioner, all that kind of stuff. So it's basically the bare bones. And so they set their price based on that. If you want to add any of that stuff, they're going to charge you more for that. So you want somebody who's going to negotiate that for you. I've negotiated appliance packages, air conditioners, decks, any add-ons and upgrades. I've negotiated those in. And if I can't get them thrown in for free, I'll at least negotiate them for a heavy discount. Right. So I've had where I've thrown an air conditioner and appliances in. I've had it where I got them for half price. I've got a deck thrown in on top of that, right? You want somebody who's going to work for you against the builder, right? Sometimes when you go directly to them, they may not even be willing to work with that, okay? So again, that's going to save you a bit of money because they typically do not touch purchase price. Builders have their set prices and they most likely are not going to touch it, right? So that's where we can get you more of a deal, is by the add-ons, the upgrades, the things that are going to cost you more that we can get thrown in for you. All right. So again, what do you lose in the cost of going straight to them is you lose the knowledge of which ones are the good ones, which ones are to avoid, somebody to negotiate for you. And like everything, just because it's a brand new home doesn't mean the people miss things. There's so many trades that go in and out of here to fix and to build these things that they're putting them up in record time. Things do get missed. I've been through tons of new builds in the last year or two, and lots of times they miss things, and you need somebody that's going to help you go to the builder and say, you need to fix this. You need to do this right. You need to do this better. And it's a lot easier to have somebody who has the knowledge and the backing to do that for you, instead of you, who's never owned a home before, to go up against a builder who's done this every day, right? So that's why you need somebody. You need a realtor to go with you to these builders, so you have somebody to back you up. And Ryan and I have done new builds many times for lots of our buyers. So this is just nothing new, just something you guys need to be aware of. Okay. All right. One of my favorite things to talk about is a home inspection. So we are running a little bit tight on time. Usually I would throw this out there, but the cost of a home inspection. Now, an average cost of a home inspection is about $500. Okay. I've had people say, well, that seems like a lot of money. And, I guess if you think of it that way, it may be. But if you're purchasing a three, four, $500,000 house, even if it's a $200,000 property, $150,000 property, $500 is nothing compared to what you could be spending if you don't know about it and what's wrong with the property. Okay. When we tour properties, we're usually in and out in an average of anywhere from 15 minutes to a half an hour. That's average what we're in there for. We don't test everything or mostly anything. I am not qualified to check every single thing out there. That's not my job. I'm here to show you and point things out that could be an issue. Then we point that out to the home inspector, right? Um, so we can only see so much in a certain amount of time. That's why home inspections are so important. The nice thing about a home inspection is this is a condition of the offer. It needs to be satisfied by you, the buyer, in order to proceed with the purchase. If it comes back bad, we have some options. Number one, depends on the severity of it. We can get them to fix some certain things. We can get them to knock some money off the purchase price so you can fix it on your own time. Or if it's very bad or you're not comfortable with it at all, we can just simply walk away and go find another house, which I have done every single one of those things. Not very often do we walk away from a place. It has to be pretty bad or very uncomfortable about it. Usually we can make something happen or negotiate with that. But those are your options. You don't have to purchase a property if you're not comfortable with this. Okay. Um, so anyways, what do you see in a home inspection? Now, They check absolutely everything. So it takes a home inspector about 3-ish hours to go through the whole house to check everything. A home inspection is non-invasive, which means they cannot cut open anything. They can't rip things apart. They can only do basically a visual inspection of what they can and test things that they can access, right? So because they can't look through the walls and they can't open a wall up to see what's behind it, they use their infrared cameras and thermal imaging cameras so they can see if there's any heat loss or anything that shouldn't be there, like if it's too hot or too cold, right? There's issues there. It can check for moisture in case there's been um, evidence of moisture or active leaking. They can test for that too. They'll check everything about your electric. So starting at your breaker panels, and then they'll check every single outlet in the house to make sure they're all properly performing and there's not going to be any fire issues and make sure it's done correctly. They'll test every piece of plumbing in the house to make sure there's no leaks that shouldn't be there. They check your furnace because, again, in Saskatchewan, I'm sure lots of us have pretty much everybody here has experienced those amazing Saskatchewan winters, -30, -40. You want this furnace cooking that house to make sure nothing freezes. So they test the furnace. They'll test the air conditioner if it's nice enough out to test it. They'll open it up. They'll check it all. They'll check every appliance in the property. Now, the thing with appliances, though, is they just check the function of them to make sure they are functioning properly. And if it's like a dishwasher or a washing machine, that they're not leaking, but they do not worry about the condition of it. If it's old, if it's new, if it's whatever, they just test that it's functioning the way it's supposed to. Okay. Just a little disclaimer on appliances. Um, and again, they check everything else. They'll go up in the attic, they'll go on the roof, they'll check the foundation where they can, they'll check the garages, they check everything about the house. So if you skip this $500 home inspection and we find out there's a leak in the roof, or there's mold everywhere, or there's a pest infestation, or there's a leaky foundation, or a cracked foundation that we couldn't see, that could cost you tens of thousands of dollars because you didn't get a home inspection. I've owned homes for many years, so has Ryan. I know when I go buy any home, I'll always get a home inspection. And I even recommend doing a home inspection on a brand new home that's just built. I just did that today before this webinar. I One of the buyers that bought through Ryan and myself, we closed on a new build. They just took possession yesterday. We got a home inspection today just to make sure the builders didn't miss anything. And there was a couple things the builders missed. So the fact that it is a new build and they have warranty, basically they can take the home inspection and go tell it to the builder, say, here's some things. Can you come and just wrap these up? Right. So just because it's a brand new build doesn't mean it doesn't have problems. Okay. So very, very, very important. If you decide you don't want to do a home inspection, though, because it's such an important thing, I make you sign a waiver that states that I recommended it, but you chose not to, just in case something ever comes up. I'm not liable for it. That's how important these are. Okay. All right. One little final thing, and then we kind of got this wrapped up a bit for you guys, and then we'll just kind of do some questions and stuff like that. But condos are also very popular because they are a very lower price point to get into the market. I have no problem buying condos as a first property because they do build equity as well, just not quite as much as a detached home, but condos do, and you can turn them into rentals very easily and buy your next one, which is another conversation for later. But when you buy a condo, no matter what it is, whether it's a townhouse, an apartment, a house that's part of a condo corporation, if it's got a condo corporation, it is mandatory that the sellers give you a copy of what's called the estoppel. That is everything about the condo, how it's run, how much money they have, who does the insurance, what the bylaws are, how much condo fees are, how much of the condo fees go to certain things, what's been fixed, what needs to be fixed, the minutes of all the meetings, and on and on and on, right? It's crazy amount of info that they give you, but it's very important you know about this stuff because you essentially are invested into the condo. What isn't mandatory about this, though, is having it reviewed by a lawyer. We are actually, as realtors, our insurance company has actually advised us that we are not allowed to give advice on estoppels because we technically are not trained in it. That's what the lawyers are for. So because you're going to be paying a lawyer to transfer the title and do the purchase for you, they usually throw this review in for free for you. Okay, so just keep that in mind. But they are the ones that are qualified to look this in or look into this for you. What I can tell you though is the things that are in it, right? So the main thing you want to look at with the estoppel package is the reserve fund. That's how much money you have saved up, or the condo has saved up for any fixes or future problems, right? You want to see a healthy reserve fund. That way, if something breaks or needs to be fixed, like the roof or siding or concrete or whatever, they have the funds to pay for it. If they don't have a healthy reserve fund, what could happen is they do what's called a cash call, where they come to every unit owner and say, you need to pay us X amount of dollars above what you're already paying in condo fees to help fix this. And that could be anywhere from a few $100s to, we've seen, a couple thousand to 10,000 or more, right? It all depends on the property. So that's why it's very important for a lawyer to review this to make sure that the reserve fund is healthy and it's being correctly, have the reserve fund study every, I believe it's every 5 years. So make sure that they do those studies all the time, make sure it's healthy and all that. So you want to make sure that's okay. You want to make sure that it's being audited properly, that you know the bylaws, you understand the bylaws, what you can and can't do in your property, because that could affect a lot of issues with you too. And what by that, I means like there's some condo properties out there that they may limit you what you can do for renovations. Mostly that's tied to like apartment style condos, but we've seen it where they say you can't put hardwood or laminate floor in the main living area. It has to be carpet because it's a sound barrier for the people below you. If you don't see that or don't know about it, and you go in and you start ripping out flooring and you pay for all the flooring and put it in, and let's say you spent, 5 grand on flooring or more, and they find out about it, they can fine you, and then you have to redo it. So again, you're doubling your renovation cost plus a fine. So we want you to be very aware of what's going on with this. That's why it's mandatory. However, the other thing like this with the home inspection is if you get this document and the lawyer says, this is terrible, walk away, which has happened before, you have that option. This is another condition in the offer. If there's anything in there you don't like, you can go find a different place. That's the joy of it, and I've done it before, just because we're here to protect you. Okay. So again, this can save you money by getting this review for, again, thousands of dollars if there's cash calls because it's not properly run, renovation things, anything like that. We want you to be aware of it because it can come up every now and then, but I do not shy away from condos because they are good investments as well. It's just you guys need to be prepared, but we are here to help with that and guide you through the whole process. Okay. Okay. That kind of covers most of it. I see there's a ton of questions coming in, so which is fantastic. I see Ryan's been busy, busy, busy. So here, I'll kind of finish this off a little bit. I hope you guys are feeling a bit better now that there's people out here that are here to help you. No matter, and this, all this stuff applies for pretty much every market, whether it's a, hot and heavy market like we're in, a slower market, whatever, this all the same thing. Get the pre-approval and have people working for you that know what they're doing and are here to protect you and not just put you in any home. Okay. So I hope that this hour of us throwing a ton of information at you was helpful and you've learned at least the starting points of what we can do for you. And if you need more help or more guidance, honestly, book the call with us again. This isn't just to see what you can do for a pre-approval. This is for anything, whether it's you're ready to buy today, tomorrow, next month, months from now, year from now, whatever. We're happy to talk with you. That is not a problem. That's what we're here for. Okay. So I hope that we helped you guys out with that. This is what you see when you book the link with us. It is, brings up the calendar and it picks a time that we're all available to help you, and then it's blocked off for you and only for you at that time. So, okay, Ryan, you can jump back in here now. I see we're throwing a lot of questions here, so I'll see if there's anything that you've missed or need me to touch on. I see we got lots of stuff going on here.
There's some absolutely great questions. I'm just finishing up one from Slade asking on what our reserve fund is. I'm actually just going to finish typing this here. Um, Give me 1 second. There we go. So really, Sayela, great question. So what the reserve fund is basically a savings account that the condo board keeps in place. They take a portion of all the owners pay condo fees every month. They take a portion of that out and they put it into that reserve fund savings account. And what those funds are for is to maintain the buildings, maintain the grounds. as the years go by, maybe the shingles are wearing out, or the siding is wearing out on the buildings, or they need some improvements or some maintenance fees done, or maintenance done on the properties, things like that. So they want to make sure that they've got that stockpile of funds that, if we say, hey, we need to redo all the shingles on all of the buildings, they pull the money out of that reserve fund and they can pay that out. Now, what happens is if there isn't a healthy reserve fund and substantial money in there to do that, and there are some condo corporations like that. They just have a depleted reserve fund. If they get large quantities of work and a high cost there, they can actually do what's called a cash call. And what happens is, they don't have the money in that reserve fund to just pay out and do the shingles. So they will go to each homeowner and say, we need your portion of whatever that cost is going to be. Hey, your question is $440,000 a condo. Is that a healthy amount? It really depends on the size of the complex. So, if you maybe have two buildings or four buildings, yeah, that's a very healthy reserve fund. If there are 50 buildings, that may not be adequate. So what happens is they actually would do what's called a reserve fund study. They're required to do that every 5 years. And what happens is they will look and say, okay, for the size of this condo complex, they look at the maintenance needed on the buildings. They look at the money in the reserve fund, and they really kind of go through and determine if there is enough money in there. Sorry, no, it's condo price. Oh, yeah, sorry. So the condo price has nothing to do with the reserve fund. The condo price itself is really just the value of the property. The reserve fund is what the condo board itself keeps out of the condo fees to make sure that they maintain the property and keep it in good order. Hopefully that answers your question.
Yeah, it's like I've done a ton of condos, and honestly, reserve funds range drastically from condo to condo. There really is no like equation that I'm at least aware of that for each condo what needs to be a healthy reserve fund. Again, the lawyers are very qualified in that. But I've seen some where it was 180,000 and they said, yeah, based on this condo that is healthy and it's fine. They've got the study. Here you go. And I've seen some where it's had 600,000 because they have a ton of different buildings. So it all just
Yeah.
depends on each condo. Like Ryan said, it's not based on the price, it's the buildings themselves, right? So
Yeah,
and
we actually will use, like, we have lawyers that we have in our stable of our team that will go over all of that and make sure that there is substantial money in there for that condo complex. They will analyze all those condo docs for us. So don't worry, we will make sure that we make sure that all that stuff is healthy going forward. We have professionals that will have a look at that and make sure that you're covered.
I seen a question up here. I see
I'm
it.
just going back here as well.
Yeah, I
Is
see
it
one
okay to have a mortgage?
there. That's the one I'm
Are,
looking at.
yeah. Is it okay to have a mortgage broker helping on the pre-approval and getting my own realtor, or having no personal realtor, but just talk to the realtor, the seller? I mean, that's an absolutely great question. I mean, Andy and I work as a team. So we really want to make sure that we're helping you top to bottom with our team. To be on this webinar, I mean, Andy's a fantastic professional. He's one of the best in the business. So to use somebody else, I mean, it's absolutely your choice, but we would never recommend that. We want to make sure that you're using the best in the business and people that have been doing it multiple years, and a team that can handle the whole thing for you as well. The other side of that is, I'll keep going on this a little bit, and then I'll let Andy jump in. Using the realtor or talking to the realtor, the seller, we never ever recommend that. And the reason for it, honestly, Maria, is that we want to make sure that you've got your own personal representation that can fight for your side. If you call like a sign call or use the realtor, the seller, that realtor is working for the seller. They are actively trying to get as much money and the best conditions for the seller. They're not working for you, they're working for that seller. So if you come in, you're not going to get the best deal or somebody working specifically for you. So we would never ever recommend doing that. We always want to make sure that we've got somebody working just for you on your behalf and is going to fight with that other realtor on that other side to get you the best deal, the best conditions, and making sure you have the most unbiased look at that property itself. And Andy's going to be your guy.
Yeah. Ryan nailed it with that one. Absolutely. When I'm hired to sell your property, I am the agent for you. I am going to fight for every nickel and dime I can get for your property. But if somebody comes to me to want to buy it, I don't have the help that I could give to the buyer for myself. You know what I mean? So the other thing is we go into what's called, if we're representing both sides, we go into what's called a limited dual agency. I don't like it. I typically do not do it because what happens is if you go to write an offer with the listing agent, if you were to write with me and I am selling the property, I can no longer really advise you properly because I cannot tell you anything about the seller and vice versa. I can't tell the seller anything about you. I basically become just a middleman. You tell me what you want to do, I tell them what you've told me, and back and forth. I can't really advise you anymore because I know what the seller is willing to take. I know what you're willing to pay, but I can't tell anybody, so I cannot advise it. That's why it's so, like Ryan said, so important to have your own representation because when you come to us and let's say, you're pre-approved for, again, let's say 500,000, but I know what you're willing to go up to, but I can negotiate for you. I don't care what the sellers are going to get. I'm going to make it as cheap as possible for you if we can. Okay. Very great question because I like that. It always comes up. Um, yeah, there was something else down here. I remember. At what point are you able to review the condo documents? Again, that's so a lot of the times there is no home inspection, no condo review, nothing until we have an accepted offer. If we're just shopping at houses and we don't have an accepted offer, we don't do anything yet. Once the offer is accepted, I usually give about 10 days to 2 weeks for conditions. That gives us time for Ryan to finalize financing, give us time to book a home inspector because those guys are busy too, and give us time for the lawyers to review the estoppel plus time to get the estoppel. I'm right now selling a property over in Stansford Road. It's a townhouse. I just ordered the estoppel on Monday because that's when we got the offer. It still hasn't come in yet, so it does take a few days to get in. Then once you finally get it, you got to get it reviewed. So that's essentially when things happen. But it's when you get an accepted offer. Um, yeah,
Yeah, and as Andy mentioned, we typically leave 10 business days to really get the mortgage approval firmed up, but to deal with things like, yeah, if we do need a lawyer to review condo docs, home inspections, all that sort of stuff kind of happens inside of that 10 business day window. That we're working furiously in the background for you to make sure that that kind of comes together and to make sure that you have all the information to make that decision to remove the conditions and go firm. So that's why we kind of do all that stuff within that 2 week window is, you know what, if it comes back and this has happened, so I mean, please know that this is a possibility. If it comes back and the home inspection is really poor, if there's cracks in the foundation and water damage, or there's not a reserve fund in the condo corp, or issues with that, or we want to make sure that you've got that information to maybe stop the purchase on this property and look for a new one. So we always want to make sure that we're going to do everything we can to get you as much information as we can to decide if you want to move forward or not. And we have had situations where the inspection came back poor, and we just said, you know what, this is not a good fit for you. Let's go find something better. And that's our job too, is to make sure that we're constantly looking out for you. Good, on the good side, getting things done, but really making sure that we cover you on the backside too, to make sure that you're buying the right stuff.
yeah, and I mentioned earlier is that we don't just find you a place for the sake of finding you a place. I will be the first one, like Ryan will be the first one to tell you if potentially you have a better, if your bank has a better rate or whatever. But same, I will tell you straight up if the house is not worth anything. I've honestly gone into the city, opened the door, opened it, stepped 2 feet into there and said nope, and we closed the door and walked away. It happens. I did it. There's another couple that Ryan and I are helping buy a place, and it happened 2 days ago. I was just telling Ryan about this. Is that they wanted to look at a house over in Langham. I had a little bit of concerns about the foundation, just the type of foundation it was. And sure enough, I drove all the way out there, got in the house, went straight to the basement, and all the foundation walls were completely bowed, which was going to be tens of thousands of dollars minimum to fix. So it was an instant, nope, sorry, and off we go find the next one. So yeah, that we're here to work for you to make it as seamless as possible, not just put you into something you're not going to be happy with. Um, Another one there for you, Ron. There, like tax stuff is a bit tougher because taxes are more on the accountant side of things and not really what I cover. That was about any GST
Yeah,
tax.
I actually just plopped it in
Oh,
there.
I see
So
it
yeah,
there.
for
Yeah.
first time home buyers, the year after you purchase, yeah, there's a little bit of a tax break. It's not so much on the GST relief. It's actually an income tax write-off. It's basically a first-time home buyer income tax write-off. So the year after, the year that you buy, when you file your taxes for that year, your income taxes for that year, there will be a little portion on that income tax return that you get. I think it's about between the federal tax and the Saskatchewan tax portions. I think it's about 1750 of a write-off somewhere in there. So you get a little bit of that money as a write-off back. So it's not a huge amount, but it is a little bit, and that's one of the benefits of the first-time home buyer.
Yeah. Uh, yeah. If I put the down payment in RRSP before payment, do it? Do I get any benefit? Again, that's that.
That is actually a great question. I just want to jump in quick on
Yeah.
that, if you don't mind, Andy.
Oh yeah, I have no
Um,
idea. So that's
yeah, the benefit of putting money into your RSP is that you will any money that goes into an RSP, you get the tax write-off for that on your following year. So to do that, yes, there is a tax benefit the year after. But again, know that when you remove money from your RSPs for down payment, you do have to repay that back over a 15-year span. So if you pull out, say, $30,000 out of your RSPs to use for down payment, you have to put back 1/15 of that money every year for 15 years until it's fully repaid back. So you'd have to put $2,000 back into your RSPs for 15 years to repay that in. We always recommend there's actually the first time home buyers account, which we actually completely recommend. So go through and talk to your FHSA, your first home savings account. Go in, get these set up. This is specifically designed for first time home buyers, put out by the Canadian government a few years ago. Each year that you are registered, you can put, I think, up to $8,000 into that account. Now it works twofold. So the one portion of the first home savings account works like an RSP. So you actually, all funds that go into that account, you get the tax write-off for it, but it doesn't have the repayment portion because it's designed for down payment. So you can put that money into that first home savings account up to 8 grand per year, and you can pull it out and you get the tax write-off right away. So I recommend that's the first place you want to put money, is into a first home savings account. Now, the other benefit of the first home savings account is, should you leave that money in there for a little while, there's also the benefit like a tax-free savings account. So all interest generated out of the first home savings account is also tax-free. So that's why we recommend that account gets set up first, because it's a two for one. We've got the tax write-off and the interest-free savings on both portions on that first home savings account. So hopefully that answers your question on the RSPs, the first home savings account as well, the difference between the two. If you have the option, put the money in the first home savings account first.
yeah. Maria had another good question here. It's home inspections are tough. Yeah. So what ways can we do to avoid wasting the inspection fee? It there really isn't much. Like I don't recommend doing, obviously, there's no pre-inspections. Some now not very rare. There's odd time there may be a house that has a home inspection done. Some sellers may choose to do one first, but it's very rare because it's basically the buyer. Because one home inspector could do it and another home inspector could do it, and they could find different things. Honestly, it's just something different that way. But if you do a home inspection and you walk away from the inspection, unfortunately, there's no that's what you paid them for, is to find things. And if you weren't happy with it, there really isn't much, you can't really get it back. I know some of the ones that I work with, and it all depends on each inspector. Some of them have mentioned that they may do like half price for the next one if you've already used them but walked away and get another one. I know the guy that I use quite often, I know he feels bad if you walk away from it. He'll buy it. Sometimes he'll get you a gift card or something like that for using it again, just because it is unfortunate it happens, but not very often does it happen. Okay, most of the time, and like when I look at a property with you or whatever, when I look at a property, I have learned over the how many years of the things to really look for, but there's no way I can see absolutely everything, and that's what the inspectors are for. And there's just no guarantee that they're not going to find something major. Unfortunately, it's just part of the process. So it's just unfortunate, an unfortunate part of it if you do end up paying for it and have to do another one. Yeah, I don't. I wish there was a better option for it, but
I would actually look at it a little bit of a different way, Maria. Instead of looking at it as, wasting the inspection fee, I would look at it like that's exactly why you're paying that inspection fee. Think of what would happen if you did not pay the inspection fee and you ended up purchasing the property, and what the inspector would have found would have been major cracks in the foundation, water leakage, and a $40,000 repair bill on the backside because you didn't go ahead with the home inspection. So don't look at it so much as wasting an inspection fee. Look at it more like that's exactly what he's doing, is giving you all the information on that property up front to make a great decision on whether you go ahead with the purchase of the home or not. I've literally seen the home inspectors save 30 or $40,000 in repair bills because he went through and said, this home is not structurally sound. You should not be buying it. As Andy mentioned, it doesn't happen often. It's very, very few and far between. But those people paid the $500 fee and probably saved themselves a 40 or $50,000 repair bill because they had that home inspection. So we kind of look at it like almost like an insurance policy. You're covering your behind by getting a great guy in there to making sure that he walks through top to bottom every piece of that home he can for you.
yeah, really great. Yeah, great way to put that too. Yeah, it's not just them finding issues, it's saving you from paying for a ton of issues you may not know about. Absolutely. Yep.
And even on the other side, if you pay your $500 and there's very minimal stuff, great. That $500 cost to have the inspection done is peace of mind, knowing that your property is great and sound and structurally safe and great for your family. That's just an absolutely great piece of advice to have, to know that you don't have any issues. That's absolutely worth the peace of mind for me.
Yeah, there's one other thing I want to touch on it too. It is not just him finding issues. Okay, that is part of it. Obviously, that's the main part of it, is you want to find out if there's some major minor issues, but he also checks maintenance stuff and walks you through the maintenance of your house too. He'll let you know how your furnace works, what you need to do to maintain it, if you've got an HRV system, things like that. And a lot of times, I know, especially the guy that I use, Colin, he's amazing for first time buyers. He'll say, look, this is fine, but maybe budget for like 3 to 5 years down the road. You may want to fix that up. But here's some things you want to focus on right now. Here's some things you want to just maintain, just like when you buy a car, you got to do maintenance on a car. He walks you through that too. So it's not just you get in there and he's like, this is wrong, this is wrong, this is wrong, this is wrong. Here's your house, see you later. He'll just walk you through everything about it to make you feel at ease about it and let you know if it is something you should look into further or just something you should just, maintain down the road, right? That's what's so great about him. It's not just doom and gloom and oh, everything's terrible. He's really good at what he does. So, but yeah, I mean that's really it. If anybody else has any questions, now the time. If not, I appreciate you guys sticking around. This is the booking link. I do appreciate everybody who's booked with us so far. I do look forward to talking with you guys and seeing what we could do for you. In the meantime, like I said, you guys, this is recorded. You'll get an email for this tomorrow. You get a good idea of the book and the buyer's guide and all that kind of stuff. So if without further ado, I guess we're gonna wrap this up tonight, and you guys enjoy the rest of your evening. And
Thank
again,
you so much for joining, guys. We're looking forward to contacting and speaking with you, and love the questions, and we're gonna love to talk to you one on one.
you
Take
bet.
care.
Enjoy your long weekend coming up too. It's gonna be fun.